Okay, so welcome. So from the previous chat and other lessons, we have been dealing with how to do top-down analysis. So we already know the elementary, which is how to navigate, including how to choose the currency pairs. So we start the analysis, the top-down analysis from a one-day time frame. So from this one-day time frame, we can see the direction of the market. So first, you try to use your trend line to identify the trend of the market. And the rules of the trend line has it that your trend line has to touch at least 2 swing points. So we have one here, and we have about 3 other wicks of the candle here. So a mere looking at this shows you that the market is moving towards the upside. Then the next thing you need to understand or look out for, having looked at this, you looked at where lies the resistance. Even when the market has been going up, so where lies the resistance? So you bring your horizontal lines and place it here. So we see here that this now becomes a key level where the green line is the green horizontal line. This now becomes a key level where price has come here, tested over time. And if you look at history, right from where our trend line starts from, this is 2nd of April 2025. So there was a spike with this candle that moves here, and when it came here, although it broke around 22nd of April, but sellers still forced down the market, and that's why it closed with a wick. But looking all through, I just hope you can see, from April to this present day, market has not been able to break this point, which is 3451.5. So having understood this, it is always advisable and recommended that while trading and identifying your trend, you should be able to use the higher time frame bias to now do your trading. So from here, every candle you see here represents a day. That's 24 hours. So every candle you see here represents a day, 24 hours. So as you can see here, that's to say, since on Monday, you see that impulsive bearish candle, the red one. So that shows that the market generally on Monday was bearish. Then yesterday it tries to push, and Tuesday and today the market is also struggling to push upward. So having understood this, you drop to 4 hours time frame. Generally, I don't like doing week, so I do day and 4 hours. So 4 hours will automatically bring us to today, what has been happening over the past 4 hours. So here we are, and from the 4 hours, you can actually see that the trend still looks up, and then the resistance point still maintained. So having seen this, what you do, you drop down to 1 hour. And for me, I like marking out my key points from 1 hour chart, on 1 hour chart. So basically, this is how the chart, our gold chart, looks like on 1 hour. And on this 1 hour, you will be able to see where price, the key zones or the key levels where price reacted the most. And where price reacted the most will now form your point of interest. So from here, you use your horizontal lines to mark. So I'm using green. So now I haven't marked all this. So it shows us clearly that this is how, these have been points of interest where price keeps on bouncing off and breaking through as well. So from here, you can now begin to have a bias. Now looking at here, price has been consolidating around this area for some times now. Price have been consolidating around this area for some time. I just hope you can see. So you now drop to 15 minutes to see how it is. So on 15 minutes, our marking is still relevant and respected. So the market has been ranging, and all of us can bear witness that the market has been ranging like this. It has been within this corridor of 33.63 to the corridor of 33.31. So within this zone, so market has been ranging here. So what that tells us is that since market has been around this key area, the next impulsive move will be to the upside, towards this resistance point, which is 3407 up here. So basically, that is it. But within here, within this range, you can as well cash some pips. And how do you do that? You reduce your time frame to a 5 minutes time frame. On 5 minutes time frame, you can as well see what to do and how to go about it. So currently the market is around here, and here you can as well try to mark out again without making your chart to look that very busy. You can still mark out the high here, and then try to also look at another low, which is somewhere here. Now, having understood this, let me just change the color so that we don't get, let me use yellow here, down, and let me use yellow. Okay, so within this range and within this channel, you can as well scalp. And what will be your bias? Your bias is that market has been going up, but again, market has been ranging within this corridor marked, or this channel marked with the two yellow lines, the support, the resistance up and the support down. And what do you look out for again? If you expand this, we're looking at SMC, sorry. If you expand this chart, is it, Madam Margaret, confirm you are seeing my chart?
I can see.
100%, yeah.
Okay. So now in simple SMC trading strategy, we look out for key levels. And what are the key levels? Support, resistance, fair value gap, order block, liquidity grab, and liquidity sweep. So now looking at this, now we want to take a trade. Looking at this trade now, you see what price is doing. They have been consistent resistance here. Haven't dropped your chart to 5 minutes. So there's a resistance here. So what do? You buy, you sell at resistance. What that means is that once it is here, you wait for this candle. This candle is closing. We're on 5 minutes chart. This candle will close in 4 minutes, 7 seconds. So patience is the key here. So you wait. Now, the next thing to do while waiting is that you identify a zone which might hold the other block. And we have been taught that other blocks are where liquidity is resting, meaning that people have opened plenty other stop loss and take profit and all that. So you come here, Chairman has told us the other day that where you see like a little consolidation around there, and then so something like that. So this will now say like an order block. And in identifying your order block, you look at the height of the candle, which will and the low of that candle, which involves the wick as well. Sorry, I'm expanding so as to see very well. So we can take this as our order block. And what that means, so two things is likely to happen here. There's a fair value gap here. There's a fair value gap here. Let me try to mark it manually. Now, if it is if we're using the indicator in the trading view, you'll see that there will be two fair value gaps around here. And because they are overlapping fair value gap here, there's this red candle here, okay? And then there's a gap here. So there's two fair value gaps overlapping around here. And in our SMC, we are taught that you target the widest gap, which will be the one below. So there's another fair value gap here between this red candle and the wick of this one. So now in the SMC strategy, now at this point, you're set to take a trade. So you only wait. Like I said, this candle will close in the next 1 minute. So if the candle close, okay, if it closes below, we're good to take a sell trade, and targeting, we can target two TPs. The first TP will be at this premium zone. The touch of this small yellow line, which I use in marking my fair value gap. What that means is that you can see now price try to break through the resistance. It's being rejected, but the candle has not closed. So the candle is closing in few seconds. So why do we target here? You can target here as your TP1 when you are selling. The reason here is that this is the band of the first fair value gap. And looking at history, price has come here and tested here and bounced up. So if you are coming to take a sell trade, you see what is happening. I hope we can see what is happening. So price has rejected that place. Sellers are pushing down the market. So another candle has started forming, and it's like it's going to be a bearish candle. So we can, at this point, we can take a trade, or we wait for that candle to close. If it close, two things might happen. If the candle close with an impulsive move towards the downside, then we enter when the second candle forms, and then target this block, this zone, as our TP. That is one. Another case scenario might be that if this candle closes above this resistance point, what the movement or the momentum that will force the candle to close, because there's a resistance here, it's like meeting a brick wall. For you to break through the brick wall, you must be able to reinforce yourself very hard and strong to break through this resistance, which serves as a brick wall in this trading, this current gold market now. For it to break through, it must show sign of an impulsive move that breaks through here. If an impulsive candle breaks through and close, and then the second candle continue to the upside, then we can decide to take the trade to the upside and then put our stop loss below this before this candle that marks the band of this fair value gap. So basically, that is it from my end. So I think our other group members can also add, and our leaders can add, since the session is for learning and I'm not a pro yet. So that is it, Ezekiel. I think I've kept to less than 30 minutes.
Thank you very much. I was observing your name. I saw Idem Eddie FX. You say you're not a pro. You're a pro. Please put 111 to celebrate Mr. Idem Eddie FX. I spotted that as soon as it came in. Please 111 everybody. I love this. I love this. You know, too much value. Put 111. Celebrate Mr. Idem Eddie FX. His name has had a surname now, a superior surname. FX has been added, and I'm super excited.
Yes,
that
I'm trying to prophesy into my life that I want to be FX. I want to be a pro in the FX. So.
It's beautiful. I saw it spot on. Oh, this is beautiful. We got value. Personally, I got so much value. And if you got value, please put value on the chat box. Put value on the chat box. Put value, everybody. Beside them, Team C, this is amazing. This is super amazing. So if you have any question, raise your digital hand. Mr. Idem is still here to help out. If you have questions, please raise your digital hand and drop your questions as well on the chat box. Network threw me out, babe.
No, you are still here. We can see and hear you. Okay, that's gone.
Keep dropping your questions, or please raise your digital hands, and then Mr. Idem can attend.
Yeah, any question, everybody. I have a backup plan. Network threw me out on the other system. Yes. Okay. All right. If there's no question, okay. I love what's going on there. So if there's no question, Mr. Idem has already given us some key points, some places to look at.
Auntie Faustina's hand is up. Auntie Faustina's hand is up.
Okay. Yeah, Auntie Faustina, I see you. Please, Auntie Faustina, take it away. Thank you.
Yeah. Good morning, everybody.
Good morning, ma'am.
Good morning, ma'am.
Okay, my only, if you can explain a little bit, where the fair value gap is bullish and then where the fair value gap is bearish. Which direction will the candle go before you know what to? I'm a bit confused still about that area.
Okay. I think we have other. Ezekiel is a pro in fair value gap, but let me just give it a shot. Madam Margaret, do you want to fire the first shots before I come in? Since we are working as a team.
You go ahead. Go ahead.
Okay, ma. All right. So, madam, good morning.
Good
Akwaba.
morning.
Aha.
It's
Okay.
saying.
Okay. Thank you, ma. So basically, when it is a bullish fair value gap, as we have here, there is all indication. First, remember where we are coming from. Where we are coming from is that the market is bullish generally. It's bullish generally. It's just that for the past few days, it has been consolidating within this zone. So since it is a bullish fair value gap, and then we have identified a zone which is more or less like an order block below here with this purple line. So it is expected that because the market is already on an uptrend generally, so it is expected that when market comes, if it taps into the fair value gap and mitigate the fair value gap, it will now target the other block, this zone that we marked here, and gather his momentum to shoot up. So two things might happen. One, we have seen the price is being rejected. A red candle shoot, but I think it has disappeared again. So what will happen here is that market will come, tap into either the first fair value gap and still go upward, or mitigate the first fair value gap and target the second one and still move forward, or then come totally eliminate both fair value gaps and then eat into this this zone marked with this thing and then shoot upward. So just like Imekban mentioned yesterday, if you don't want to be cut off in anything, you just wait and be patient. And wait, whenever price come here, it might be today, it might be tomorrow, it might be on Friday. Whenever, because the market has been very sluggish since on Monday. So anytime the price comes and tap into this zone, then you are now free to buy to the upside. What is your justification for buying to the upside? Because generally from where we are coming from the day time frame, 4-hour time frame, market is generally on the upside. So that is it. Ezekiel, you can add, Chairman can add, Dr. P, Dr. D can also add, and a whole lot of others. We're all learning together. So you see, price has rejected that zone. So it cannot form, like I said, it is a bullish and impulsive bullish candle that will break this and close. You see, it didn't close. The body, part of the body is on the lower side and the other side. So it didn't, if it had closed with a full body on top and perhaps with an impulsive move, then one would have considered that, okay, market is aiming at this green resistance bar that we earlier drew in 4 hours. But now it has rejected. So if it closes, if this current candle closes below, which is more than less than 1 minute and so, if it closes below the resistance point and form another candle, you can now enter the market from the second candle and you sell down. Over. Ezekiel, you can add. Dr. D, you can add. The Forex lady too can also add. Thank you.
All right, Auntie Faustine, thank you very much.
Yeah.
Auntie Faustine, Edem, Eddie, please, I want to get used to it, Mr. Edem. Edem,
You can
Eddie,
just call
FX.
me Edem. I don't like mistake with my name. I'm not a gent. Mistake is for gentle people. I'm not a gentleman. So you can call me Edem or Ed. That's all.
Okay, all right. It's the FX I really want to bring in, so I love it.
Okay.
All right. All right. So Eddie FX, yeah, thank you so much. Auntie Faustine, in the situation is the bearish fair value gap. You see what's happening right here. Let me quickly give us an expo. Please go to 4 hours, sir. 4 hours time frame.
Okay, sir.
4 hours time frame. So I think that I
Voice,
just want to answer your question practically. 4 hours time frame. Are you there, sir?
yes, sir.
Eddie FX, sir.
He's
Okay.
here.
So yes, on 4 hours, if you mark 33.64.074, there is a fair value bearish fair value gap there. 33.64.074.
Yes.
There's a fair value gap there. You can spot it, right? 33.64.
33.64.
Maybe you can
Yes.
just use your rectangle to just map it out.
Okay, sir.
33.64 and to 33.67. 33.64 to 33.67. So why this what Mr. Eddie FX is talking about has not started yet is because the market is actually gravitating towards that imbalance, the bearish imbalance, which is the fair value gap. So trade call for everybody as soon as it taps into that 33.64.078 or 0.178, get ready to do that sell that Mr. Eddie is talking about. And then you can, first of all, take it down. Auntie Faustine, I'm answering your question. I'm doing trade call at the same time. So you can then, trace it down, take it down to 33.63. That's like a 10 pips there. Then the second TP, you can now aim at 20 pips. So you do 10, 20, and if you want to do the third one, you can do 20 again. But once you hit your TP1, break even as fast as you can. So what Mr. Eddie FX is waiting for is going to happen at 33.64. And to answer your question, why is that happening is because there is going to be a reaction at the bearish fair value gap, which is right there that he has marked out right now. So we expect a reaction at the tapping into that to that bearish fair value gap. And once it taps in, the force right there, the further imbalance force will definitely, that pressure will push it down first. Then it needs to gather momentum and come back and do a 50% of that. All right, like you see what it's doing now. So it needs to gather momentum and come to do a 50%. So what is happening now is telling us that it's already building up momentum. We are on 4 hours. If we go to a lower time frame, we would have seen that there would have been a touch and a pushback. Then it's gathering momentum to do 50%. Yeah, that's my alarm. So when it does 50%, it comes down. Please wait for me before I miss the money. Sorry, 1 minute. Going to push back at the 50% of. So that is how it what's it now? The bearish fair value gap is the 50% point there is giving us our what's it now? Our premium and discount within the 50%. So the high probability setup for a sell right here will be actually that it hits that 50% of this fair value gap before it starts coming down. So generally, what I saw on the market since yesterday is that the market is bullish. That's what I saw. That's my own bias. Okay. I've not changed it yet. You understand? That's what I saw. But on Monday, it's actually been showing bearish, bearish, bearish. And I can see yesterday throughout, I was aiming at those bullish moves. Those bullish moves has really been showing very strongly with what is happening. So where I'm expected that there is now going to be a bearish continuation is when it gets to this fair value gap and it has come to it. So that answers your questions of how do you treat that bearish fair value gap. All right. So for me, this bearish fair value gap becomes my supply, and the one that the one that Mr. Eddie is pointing at 15 minutes time frame becomes my demand. So if you play between this supply that we have now and the demand that 15 minutes time frame is showing us, please enjoy the pips and close for the day. So you don't really need to wait for all those major ones until it happens. Mr. Imekman, he's waiting for those ones. But for us that want to take at least $100, $50, $20, we can play within this bearish fair value gap here on 4 hours. We can play with that. And then the one on 15 minutes, we can play with that too, to be able to have our supply zone and our demand zone, and then see how much pips we can take in between those two today. If you're able to take up to 40, is okay. You're able to take up to 50, is okay. You're able to take up to 30, is okay. So those, Mr. Med Mr. Eddie FX has dealt with the bullish one. Then you asked about the bearish, then we've touched on the bearish, and what we talked about is already happening. So thank you very much. Hope you got it, Auntie Faustina.
Thank you. Thank you, Ezekiel. Thank you.
It's clear now. Okay, bye.
Yeah. I'm sure we are already in profit. Let me stop recording. Thank you. All right. More we 10:46. All right, we'll be passing it on to our chairman and our leaders, Auntie Dupsy, Auntie Shampepe. I don't know if our chairman is on the call, but Team C, Auntie Etohudo, Eddie FX, we appreciate you a lot. So chairman, our mentor that had been helping us, Judith called him a good shepherd today. I'm also happy to see that. So chairman, please, if you're on the call, please take it away, sir.
All right, great one, Eddie. Good morning, everyone. That was amazing. So, great one. Great, Ezekiel, good one here on this call. I think we sent a trade on the group, and the entry was this 64. I think it's between the entry. What was the entry again? What was our entry? That last trade on the group, what was the entry?
The range you put here, sir, is 33.59 to 33.64.
Yes, so targeting that fair value gap, which Ezekiel just called. So that's a good one. But we have Auntie Shampepe is on the call, Dr. Dupe is on the call. So let me pass it over to them. Auntie Shampepe, Dr. Dupe, over to you.
Mr. Eddie, please stop recording. It seems you recorded on laptop.
I did not record. It's to share. I should stop sharing.
Yes, you can, so that Auntie Dupsy.
No, let's stop. Hold on. Let's stop recording. Once you're done with the training, please stop recording so we can have